I would like to welcome you once again to this exciting series where we're discussing how the government can incentivize private sector involvement in agriculture financing. And in front of me, my two panelists who have joined me. I would like to welcome Mr. Stephen Kawe, who's the outreach coordinator at IAPRI. Also, I'd also like to welcome Mr. Kalima Chaleka, coming from SEC, who's a financial analyst and inspector. Gentlemen, welcome, and I'm grateful to have you on my panel. Yep, so actually before I came here, I was actually reading some literature, and one interesting fact is that we've been talking about agriculture, I think, from the time that Zambia gained independence. And I think even before we gained independence, agriculture has been at the mouthpiece of government. And even if you look down into the statistics, you find that agriculture is the largest employer. If you look at the total working population, I think around 700,000 of the total employed persons come from the agriculture sector. But despite it being the largest employer, the contribution to the national economy, to GDP, has been declining. Currently, we're talking around ranges of, I think, 3% contributing to national economy or GDP. But then if you go down, you dig down into the numbers, you find that one of the reasons is that despite it being the largest employer, over 90% of the people that are coming from the agriculture sector are coming from the informal sector. That's where you have small-scale farmers, peasant farmers, subsistence farmers, and the big guys, the commercial farmers, are only constituting just less than 10% of the employed population coming from the agriculture sector. So that already tells you a story that even what they'll contribute to the economy would be less, even if you compare it to what the big guys will contribute. And one of the reasons that we found is that they don't have the right infrastructure in place, right technologies in place, and all this comes down to the issue that they don't have the right financing mechanisms in place. So we need now to start to understand what is it that we can.
This is post thinking time, agricultural policy thinking time. We do agricultural policy analysis, and once we have generated the information or the evidence, we share that evidence with policymakers as well as the other stakeholders in the agricultural space. We also do agricultural policy analysis on capacity building to various stakeholders. On top of that, we also do business, so we do consultancies as an institute. So if we have anyone looking for do research, you have to come and engage us as a company. Yeah, so coming to your question, first and foremost, agriculture as a food is considered as a key sector that can inspire economic growth in the country. But of course, the sector has been marked with various challenges. The key issue we're discussing now is the issue of financing. That is one of the key challenges which most of the entities, most of the farmers are facing. Okay? So being challenged, what should be done? No, first let me just highlight some of the statistics which are there. We're doing research, we have actually come to realize that only a few farmers or farming households access agricultural or loans. From the studies which we did, from our rural livelihood survey, we actually estimated about 60% rural households accessing agricultural financing. So you can see that that is a small number. Okay, when you compare the number of farmers who are there production. These loans are given by the private companies, give to the farmers, and then they deduct the money farmers pay to these companies after selling the cotton to the Indian companies. So in terms of geographical areas, of these farmers, being consider they are not accessing loans from abroad scheme. So the majority from Eastern Province, Central Province, and part of Central Province. So these are cotton growing areas. Yes, I think as I've indicated, this is a challenge because when we are talking about agricultural financing, it can actually trigger farmers or entities to invest once they access in agricultural activities. But if they are lacking finances, that is a challenge. And actually, what government is which is agricultural growth, as well as economic growth among our farmers. But I can also say that the farmers also get financing through government activities. Agricultural credit facility in which the government announced. And that is of course provided to those civil servants that do not access any loans through our basic. Yeah, so basically agricultural financing is a key component in this project.
Thank you very much, Mr. Kawe, for that situation analysis, which is quite painful. I mean, 16% of these rural households are the ones that are accessing financing. Of course, you've highlighted that government has also put in quite a number of interventions. I think you mentioned the FISP, and also, if I remember, we also have the food security pack, and the one that civil servants are accessing. Bear with me, I've just forgotten the name. Yes, yeah. So, yes, we have these interventions by government in trying to provide more financing to the agriculture sector or to these small-scale farmers. But again, the numbers on the other side keep telling us a different story. I mean, 3% contributing to growth is something that we should be concerned about. So we need now to start looking beyond maybe the financing. Yes, we need the financing to come on board. But then, what are the other parameters that we should start checking for us to have this adequate financing on board? And probably something that maybe I'll ask Mr. Chaleka. Government, yes, has put in interventions. We've talked about the FISP, the food security pack. But then, your thoughts around creating a conducive environment to attract private sector to come on board to provide this much needed finance? Because, central government has got quite a number of expenditure lines it has to meet there, and every day it has to meet. Right now we've talked about, we are now talking about the debt service costs that have actually come back on board. So of course we know that some other expenditure lines might be suspended, and maybe even these social protection interventions like this might be suspended. So what are your thoughts around creating a conducive environment, looking at existing policies, how we can reform them to actually attract the private sector to bring more financing and actually not to crowd them out?
Thank you for that question. Just to, I think, put some context to the discussion, I think we have seen as a country the impact of the El Nino drought across our economy. You may wish to know that the Ministry of Finance and National Planning has obviously given us information in terms of the revision on the economic growth. So they've revised that the projections basically for this year in terms of how the economy is going to grow is going to be at about 2.3% from the initial about 4.8 or 5%, as initially projected. So that's the impact of drought that obviously now spills into the different economic sectors. Name it energy. We've seen what has happened in terms of the deficits in electricity, and also when you talk of agriculture, I think it's one of those sectors that obviously, as we are discussing here, and obviously also to speak to the theme for this year's agriculture and commercial show, which is obviously to create a competitive future. Agriculture still remains as a cornerstone for our economy, and the impact caused by drought and so on and so forth really cause damages. Now, that raises the next question of funding to this sector. And obviously, before I talk about SMEs, I think it's important to also state that in terms of how we adapt and mitigate the impact of climate change within the agriculture sector, agriculture financing, as well as the economy in general, we've been told that in terms of the funding that we require for adaptation as well as mitigation, we need about $17 billion US. That was also revised from the $50 billion US that was earlier projected in 2022. But then for the capital markets, I think it's important to state that the role of the regulator, the Securities and Exchange Commission, is obviously to provide a conducive environment for SMEs to obviously thrive, and that basically speaks to financing. So obviously the SEC, through the Capital Markets Master Plan, which is a 10-year plan, that speaks to different activities that will obviously drive the development of the capital markets over the longer term. We've got pillars that speak to, for example, Pillar 3 that speaks to the innovation of products that will be required, obviously, as options to help mitigate the impact of, for example, the funding that we require within the agriculture sector, agriculture financing, and other sectors. And I think that from an incentive perspective, some of the policies that will be required going forward, I think, to encourage funding for SMEs would be, I think, for example, tax deductibility. So I think one key incentive is to allow tax to be allowable for certain inputs and equipments that will be required within the agriculture sector. So for example, if there are tractors that will be required to just help the farmers, the agriculture sector to thrive, because obviously one of the challenges that we're discussing here is the limited financing for several reasons, because of collateral, because of SMEs probably not having bankable projects, viable projects. The risk that just sits with the SMEs has been a challenge. So the capital markets obviously providing a platform for longer term financing that the SMEs cannot access through the banking sector. I think one of the strategies could be to have solutions or products that would bundle for example, farmers through an SPV, because then a special purpose vehicle could help de-risk the risk that obviously sits with these farmers that would require financing. So, like I said, I think in terms of getting tax allowances, getting tax deductibility for inputs, equipments that would be required for farmers would be key. I think one other issue is for us in the capital markets is having alternative products. I spoke to the pillar that relates to, having innovative products, developing innovative products for financing. So green bonds are, a type of financial instrument that could be used to mitigate the impact of climate change, and obviously also, most importantly, for us, there is what we call use of proceeds. So green bonds can provide a platform where we can have agriculture projects raised through issuance of green bonds for financing. I think one other incentive from a policy perspective and fiscal perspective that the Securities and Exchange Commission has also submitted to the Ministry of Finance and National Planning for consideration in the 2025 national budget is the one that relates to private funds. So what you see is, can we obviously have tax exemptions? We have those that relate to collective investment schemes and REITs, but can we have tax exemptions that would obviously facilitate, funding to investors? So ideally through private funds, can we have the financing channeled towards SMEs? So that's one fiscal incentive that is under consideration. Thank you.
Thank you. Thank you for that. I think the audience is following. Are we following the? Yes. Okay, that's good. So, Mr. Chalik, I liked that you actually read my mind and started talking about the capital markets. Though you started talking about it, it's a question I wanted to throw to Mr. Kabwe. I still keep talking about the 16%, but of course there's more that can be done, of course, to bring in more players to access this finance. And my panelists here already started talking about the capital markets, which you already know is an alternative source of funding. Even multinational companies, even companies locally actually float on the securities, on the capital markets, and actually get extra finance to fund their operations and expansions and the like. So what mechanisms can we put in place to actually bring even these, the players in the agricultural sector, be it commercial farmers, small-scale farmers, bring them on the capital markets to actually access this private finance we're talking about?
Thank you so much for that question. Maybe before I answer it, let me also just mention that our agricultural sector or system is actually a dual type. We have smallholder farmers, we also have commercial farmers. Smallholder farmers, definitely, as you have seen in terms of the statistics, very few access loans or finance, agricultural finance. But when you look at the commercial farmers, these guys actually, they are financially literate, and they actually get loans, for agricultural related activities. Yeah. So for the commercial farmers, yes, I think it's the issue of maybe sensitizing them about this platform of the exchange, as a source of finance, raising. They can actually raise finances from the platform and use it for agricultural related activities. I think a good example which I can give on that is the bonds that CEC actually raised to finance green energy. That's a very good practical example which a private institute or a private company can do to raise finances to implement, green related activities. So even our commercial farmers, they can actually raise finances to do agricultural related activities. For the smallholder farmers, I think as I mentioned, the major, source of income is actually not through outgrower schemes. So these outgrower schemes are actually developed by the private, companies. Okay? So how can these private companies raise, finances? They can actually, go to security exchange, maybe, put up a bond, raise, money, which they can use to help, smallholder farmers access that fund. Because, of course, as, you have heard, our smallholder farmers, most of them, they cannot definitely not go straight to the security and raise. But if, let's say, we use private companies, which can actually issue, for example, a bond, then they use that money, to finance, certain activities. I think that is achievable. Okay? I think that is, a platform that, can be used. Then I think, another, platform which is there, it's actually the Agricultural Credit Act, okay, which enables, ZAMES, if you have heard, about ZAMES, to issue, the coupon, okay? But the unfortunate part is that that coupon is not recognized by the financing sector. So I think from the studies which we have done, we have actually encouraged the harmonization of the Agricultural Credit Act and the Security Exchange Commission Act, so that if let's say that coupon is issued, it has to be recognized as a financing, tool. Where, for example, if you as a moderator you have a crop, you put it in the certified, storage facility, then they issue a coupon, you can use that, to go and use it as a resource. I think that is another way. So for that, to happen, we really need to make sure that, we harmonize those two acts. And I'm happy that, government, the Ministry of Agriculture is actually working on that, with various stakeholders. So I think, those are some of, the mechanism that can be used, to raise finances, for the smallholder farmers, the commercial farmers. I think they've got a muscle. Those they can straight, go and, raise finances through the exchange.
Thank you. Thank you, Mr. Kawe, for those insights. And something that caught my mind as you were talking is we've got these mechanisms that the farmers or our colleagues in the agricultural sector can venture into to tap into this extra finance. But then I'm thinking, I know SEC is a regulator. Maybe this is a question I'll throw Mr. Chaleka. SEC is a regulator. What mechanisms maybe would you put in place to actually incentivize or bring these people on board in the capital markets? Because I think from one thing that I got from Mr. Kawe is that even them knowing that these mechanisms exist is also a challenge. I think if you go in the rural areas, if you even talk about LUSE, SEC, capital markets, that would be strange language to these people. But again, it comes back to the issue of how much knowledge is being thrown out there for these people to actually say, okay, even if we form cooperatives, we go to the outgrower schemes, we can actually tap into these capital markets to access finance. So I know as a regulator, it might be something that might be off your grid, but do you also have mechanisms or incentives to actually throw that information out there and bring these players in the agricultural sector to the capital markets?
Yes, that's an important question. So you realize that the Securities and Exchange Commission is quite big on financial literacy. I think we are quite big on investor awareness. You may be aware that we conduct our monthly town halls where we have different topics that speak to the different products that obviously are there on the capital markets. So I think that's key. And maybe before I move to, the other element, it's also important to mention that part of the incentives that we also submitted for consideration in the 2025 budget are to do with incentivizing investors that obviously, and organizations that, communicating financial literacy messages that relate to savings, that relate to different products on the capital markets. As you may know, the capital markets is a platform for raising funding through securities, be it equity financing, equity financing, bonds, unit trust, and so on and so forth. So we also obviously submitted that if we can have tax rebates, of even about 5% or 2% around income tax for those institutions, organizations that are promoting financial literacy, investor awareness activities, that would really, really incentivize and communicate and help us push this message going forward. And obviously, with the hope of reducing the gap around, the knowledge in terms of the alternative means of financing. I think it's also important to state that there's an alternative market on the Lusaka Securities Exchange for SMEs to raise funding. And obviously, that is a platform where, SMEs can raise funding that cannot, go through the main board of listing. And think that's also key because then, it provides an option for them to raise funding if they cannot meet other listing requirements. Maybe also to state that in terms of incentives that relate to potential green bond issuers, so currently we have 15% withholding tax exemption on interest and for those bonds that are issued for a period of at least 3 years for the green bonds. So in terms of the investors, we have that tax incentive, so you don't actually pay that if you invest in a green bond. We also have 50% reduction in terms of processing fees that you pay to the SEC. One of the biggest hindrances for the issuance of green bonds and other sustainability linked instruments in this market has been the cost. So what you see is for potential green bond issuers, we currently do not have second party opinion entities that can provide third party opinions. So what you see is overall, when you look at the accounting fees, the arranging fees, broker fees, and all those fees, transaction fees that feed into the issuance of a green bond, what you see is that most of the potential issuers really see that as a huge hindrance for issuance of green bonds. So, like I said, I think what we hope to see is probably a reduction on the issuance costs. If we can have an incentive there, for potential green bond issuers. Maybe the other element to also state is that, when you walk into a bank today, you open a savings account in the commercial banks, and after a few months or year, you earn interest on your savings, right? But in terms of investment products that sit on the capital markets, apart from obviously dividends that for companies that are listed, We also hope to see that we can have exemptions in terms of tax incentives from a physical perspective for all the products, interest, and obviously on the products that sit on the capital markets.
Okay, so I think Mr. Jaleka has highlighted quite a number of incentives and also ways that the players in the agriculture sector can tap into the capital markets. But colleagues, this shouldn't be a one-sided conversation where it's only the three of us speaking. So at this point, I look into the audience, I see people are eager to ask questions. Maybe we've got some smallholder farmers, we've got some commercial farmers there. And I don't know, IT, if you can advise, do we also have people online that will be throwing us with some questions? I think IT will be able to tell us that. So, ladies and gentlemen, at this point, let me also extend the opportunity to the members who are with us right now and also the members who are online to also join the conversation. And we are here in the front to see how best we can keep the conversation running. So I'll take 3 questions from the audience, and then my panelists will be able to respond. Thank you.
Good afternoon. My name is Bruce Mulenga from Securities and Exchange Commission. Just to commend the panelists for that insightful discussion. I found it very intriguing. Mine is not really a question, but essentially a contribution. Mr. Kawe did refer to the Agricultural Credit Act. This act essentially creates warehouse receipts. Yes. So if you look at the Securities Act, a warehouse receipt is actually defined in the Act as a security. So it's an instrument that can be traded in the securities market. So it's an important funding instrument for the farmer. The farmer can deposit their produce in a warehouse, have that produce certified, and a receipt will be issued, which the farmer can use to get funding. The farmer can present that receipt to a bank for funding, or it can be traded on the secondary market. I think what we need to do is to create awareness about this funding instrument called warehouse receipt, and to create a market for this instrument. Thank you.
All right, thanks, Mr. Mlenga, for that contribution. And I think I've also learned something. I've got some vegetables in my backyard, so I'm going to deposit them in a warehouse and get some financing. Yeah, so I think Mr. Mlenga raises a good point. I think at the end of the day, it's awareness. And we should ask ourselves to say, how many of the farmers know that you can actually trade this as an instrument on the market? So I think maybe we should now challenge our colleagues at SEC and the Lusaka Securities Exchange to actually move this motion, create more awareness for some of these financing mechanisms for the players in the agricultural sector. Colleagues, any more questions? Do we still have questions? in the audience? Do we also have questions online? Our panelists are ready to answer.
Okay, maybe as we wait, for questions, thanks so much, Mr. Mlenga, for that, contribution. And yes, I think, awareness is key. The Occasional Credit Act is there. But of course, as I indicated, it has to be harmonized with the other acts, especially the Security and Exchange Act, to make sure that we support what Mr. Mlenga put forward. Yeah, and also not just to add to what Mr. Kalima mentioned, the issues of reduced tax on certain implements. I think that is very, very important, moving forward. Also, I think, colleagues, if you look at the interest rate, for the loans, from the financial institutions, in our country is on a higher side. Okay, and that limits our, businesses, even farmers, accessing, some of the liquidity or loans which may help them in their agricultural related activities. So how can the financial sector help us to make sure that at least we have reasonable interest rate that can attract more players to come on board? I think that is key. If you have higher interest rate, it will not attract more players to come and access your rate. So I think there's need to see how well interest rate can be reduced. We have to encourage the banks to also increase or to reduce so that they increase the lending portfolio. Okay, you look at you work on the turnover. I think that is very, very important. Yeah, I think let me also just mention on the agricultural credit facility which government has issued. I think that is key to help farmers to access finances. That is a guarantee. Okay, government is guaranteeing for those loans which one can access. So farmers, civil servants, farmers, they can take advantage of that and try to access finances to help them in their cultural activities.
Okay, looking at time, I think we have a question from the audience, so we can start with Madam here, then the gentleman in that order. Thank you.
Thank you very much. Very insightful discussions we have. There was a question that was asked around awareness and what the Commission is doing, and I'm sure it goes to other associations as well. What I wanted to bring is a contribution that aside the efforts that we are making as the Commission to bring awareness to the opportunities that are embedded in the capital markets, we would also like to see interest-driven communication awareness programs whereby we are requested to further what we know as which can work for these farmers or even other interest groups. The Commission is very much available to offload, and I think as everyone can attest, we have that much open doors to creating solutions, especially now when we are running with the capital markets master plans, which is a part of which is fostering financial inclusion. So we would like to invite people out there who would like to know how best they can structure financing solutions that are accessing the capital markets. That was the contribution I wanted to make.